Over the past few months, the US dollar has been experiencing a significant rise as financial markets anticipated that former President Donald Trump's economic policies would have far-reaching consequences. Investors widely expected that his proposed tax cuts and protectionist tariffs would disrupt global trade, weaken other economies, and ultimately lead to more aggressive interest rate hikes by the Federal Reserve. These expectations contributed to the dollar's strength as traders and institutions sought to take advantage of higher yields in U.S. assets. However, after a gradual but mild decline throughout February, the situation has taken a sharp turn. In the past few days, the dollar has experienced a sudden and pronounced slump, plunging to its lowest level of the year. This abrupt reversal has caught many investors and analysts off guard, as the dollar had been on an upward trajectory for months. In today's video, we will analyze the reasons behind this dramatic shift, examine the factors contributing to the dollar's sudden downturn, and explore the broader implications for both the United States and the global economy. Why the dollar was rising. To fully grasp the significance of the dollar's decline, it's important to first understand the reasons behind its initial surge. The dollar's strength can be traced back to late 2024, when Trump's chances of winning the presidential election began to increase. As financial markets reacted to the possibility of his return to the White House, investors started moving money into the dollar, leading to a steady rise in its value. Once Trump officially won the election, this trend accelerated. One of the best ways to measure the dollar's strength is by looking at the US dollar index, which tracks the currency's value relative to a weighted basket of other major currencies. This index provides a more comprehensive picture than simply comparing the dollar to a single currency, such as the euro or the British pound, since bilateral exchange rates can sometimes be influenced by factors unrelated to the dollar itself. According to the dollar index, the currency saw a steady climb beginning in late September, eventually reaching its peak in early January. At that point, the index hit a nearly 3-year high, reflecting the dollar's robust performance. However, even this measure somewhat understates the true extent of the dollar's strength. If we exclude the brief, panic-driven surge that occurred at the onset of the COVID-19 pandemic, when investors flocked to the dollar as a safe haven in times of crisis, the peak observed in January 2025 represented the strongest the dollar had been since 2002, over 2 decades ago. So why did the expectation of Trump's re-election drive such a powerful rally in the dollar? The answer lies in a combination of 3 key factors. First, investors anticipated that Trump's economic policies, particularly tax cuts and tariffs, would lead to higher inflation. When inflation rises, central banks, including the Federal Reserve, tend to increase interest rates in an attempt to control price growth. Higher interest rates make holding U.S. dollars more attractive because they offer better returns on investments like bonds and savings accounts. This expectation of tighter monetary policy from the Fed helped push the dollar higher. Second, there was a general belief that Trump's trade policies, particularly his aggressive use of tariffs, would disproportionately harm other economies, such as China, Canada, and Mexico, rather than the U.S. itself. As a result, investors expected foreign currencies to weaken relative to the dollar, further boosting its strength on global markets. Since exchange rates are determined in relation to other currencies, the perceived weakness of the euro, yuan, and other major currencies contributed to the dollar's rally. Third, optimism about U.S. economic growth played a crucial role. Many within the American business community believe that Trump's pro-business agenda, centered around tax cuts, deregulation, and incentives for domestic manufacturing, would stimulate economic expansion. Additionally, there is already a wave of enthusiasm about advancements in artificial intelligence, AI, and their potential to drive productivity and innovation. When combined, these factors created strong confidence in the U.S. economy, further elevating demand for the dollar. The dollar's decline. Recently, however, this bullish momentum has reversed dramatically. While the dollar experienced a slow and steady decline throughout February, the past few days have seen an acceleration of this trend to the point where it could reasonably be described as a crash. As of Thursday morning, The dollar has fallen to its lowest level since Trump's election victory in November. While the term crash might seem extreme, given that the dollar remains strong by historical standards, this decline is notable for two reasons. First, the speed of the drop is significant. It marks the sharpest decline since the early days of the COVID-19 pandemic in 2020. Second, the fact that the dollar is weakening at the same time that Trump is imposing major tariffs on key trade partners like China, Mexico, and Canada is particularly surprising. In theory, these tariffs should have reinforced the dollar's strength, yet the opposite is occurring. So what's behind this unexpected downturn? As with any financial market movement, multiple factors are likely at play. One possibility is that Trump's tariffs have been more targeted than investors initially expected. For example, his administration has so far refrained from imposing the broad, across-the-board tariffs that were frequently discussed during the campaign. Instead, the tariffs introduced have been more selective in nature, reducing their immediate impact on global trade flows. Additionally, recent developments in global technology have raised doubts about the assumption that the U.S. would dominate AI-driven economic growth. Chinese firms like DeepSeek and European companies, such as Mistel, have made significant progress in AI and semiconductor technology, challenging the narrative that the U.S. is the clear leader in these areas. As a result, investors are reevaluating their outlook on future economic growth and investment opportunities. However, the primary reason for the dollar's decline appears to be growing concerns that Trump's policies are pushing the U.S. economy toward recession. But the key takeaway is that the uncertainty surrounding Trump's economic and trade policies, particularly his frequent shifts in stance, has led to declining consumer and business confidence. With economic uncertainty on the rise, the risk of a slowdown has increased, making the U.S. less attractive to investors. One way to quantify this uncertainty is by looking at the Federal Reserve's Trade Policy Uncertainty Index, which measures investor sentiment regarding trade policies. This index is currently at a level 12 standard deviations above its historical norm, indicating an exceptionally high degree of market unease. Moreover, overall economic policy uncertainty is at its highest level on record outside of the pandemic period. Could this be a positive development? While a weaker dollar is often seen as a sign of economic instability, it could have some unintended benefits. From Trump's perspective, the depreciating dollar might actually help achieve some of his economic goals. A weaker currency makes American exports more competitive on the global stage, as U.S. goods become relatively cheaper for foreign buyers. This could help reduce the country's persistent trade deficit, which has been a central concern of Trump's economic agenda. For the rest of the world, a declining dollar may also provide some relief, particularly for developing economies. Many global commodities, such as oil, are priced in U.S. dollars. A weaker dollar means that these commodities become more affordable, which can help stabilize energy costs and inflation in emerging markets. Additionally, a weaker dollar reduces the cost of servicing dollar-denominated debt, easing financial pressure on nations that have struggled with rising borrowing costs in recent years. Ultimately, while the dollar's recent decline raises concerns about the U.S. economy's trajectory, it also has the potential to create both challenges and opportunities on a global scale.
If you enjoyed the video, don't forget to like, subscribe, and share. Thank you for watching.